Consumer staples have outperformed the broader market year to date. A part of this is a rotation into what's perceived as slightly more defensive areas of the market, as well as a rotation out of some of the winners from last year. Even within consumer staples, you've seen this play out in the sense that food, beverage, and tobacco have outperformed household personal care, which have also outperformed retailing names, which in opposite order was the pecking order of performance last year. Consumers faced a wall of worry over the last couple of years, from inflation to overhang from election and now tariffs. Taking a step back, looking at something as simple and staple as food, making a choice between food at home versus food away from home versus what you make in terms of wages, you still see a significant gap between food prices and wages. Now, year over year, we have seen some of the pressure come off. However, if you look at it cumulative since 2020, you still have about 2 to 4 percentage point gap between the price of food away from home or at home and the wage gains. With regard to tariffs, the situation remains fluid. The news flow changing day to day, almost by the hour these days. What is really uncertain is the actual final impact on the consumer, because companies haven't taken price necessarily just yet, again, because the situation remains fluid. And it also remains to be seen what the final impact on demand is to the consumer and the timing of it. Many of these companies have between 2 to 6 months of inventory on hand, so you might not see the timing of price increases hit until later this year. Looking forward, we still like companies that have strong brands and are able to invest behind these brands, as well as provide value, but value not only in terms of price.